Hello again, this is Charlie Belfontaine, and we are the Chicago housing experts right here on WCPT AM 820. And I got in the studio with me.
This law on TikTok. The law at the end of that, in case it's early in the morning, I haven't quite sorted out what that might mean. It means I'm a lawyer. That's right. I'm a real estate lawyer. That is why I'm part of the Chicago housing experts. You see, that's how that all connects up. So, you want real estate expert lawyer talk? Come find me on those social media outlets or subscribe to my YouTube channel, Loftus Law.
Outstanding. Normally, I wait to throw our company information out there at the end, but I am going to do a little plug early on. My name is Charlie Belfontaine. I own Chicagoland Home Inspectors, and our phone number is 312-544-9180. And we also put together a community that we want people to start asking questions, and that's what this whole expert thing is about. So putting Steve and Joey and Patrick, myself, and we are going to be bringing in other people. If you're looking to sell your home or buy a home or something, we want you on there and asking questions. And then also, if you want to get involved when we record this show on Wednesday mornings, please do. You know, any question that we get into that group, we are going to try and answer them here. And the first one is actually going to be about mortgages. So I'd like Joey, if you don't mind, introduce yourself and then give us the update, and then let's get right into the mortgage questions.
Very well. My name is Joey Matthews, the VA loan nerd. You can call or text me at 630-235-2405. You can find me on all the social medias as at the VA loan nerd. You can swing by my website, thevaloannerd.com. Today in the markets, we had the ADP jobs report come back significantly later where we would have normally anticipated. So we have seen the 10-year Treasury take a little bit of a dive down to 4.371% yield, while the mortgage-backed securities have increased across all of the coupons by at least 20 basis points. The 5.5 and the 6 coupon are both at about 30 basis points on the morning.
And I know you know what all that means, but I don't.
Well, we're going into mortgage questions anyway. I mean, like, hey, it's good for rates, right? That's all
what
that
I
matters.
wanted
It's
to
a
know.
good day for rates.
Whoever was staring at Joey during that whole thing must have just left the room, because that was a very un-Joey-like way of speaking. And then when you were like, I don't know what that means, he's like, hey, now
we got Joey back. Yeah.
We got you, mother.
All right, so there were less jobs created or less jobs out there than we thought there was going to be. That suggests there's weakening in the economy, which meant that investors are flocking toward 10-year treasuries and other safer investments. And when more people are buying bonds, which a 10-year treasury is a bond or a loan to the U.S. government, when more people are buying those, the rate of return reduces. And the connection with that to mortgage rates is that there is a loose association between the 10-year treasury bond return and mortgage rates. Joey, is that a fair summation?
Crushed it, PJ. Crushed it. Nailed it.
Bam.
Still trading in the same range we've been in for the last freaking 6 months, you know.
So stability to a certain extent, at least in that little bitty
In that
tiny
microcosm
realm.
of time.
In
Yeah.
that little bitty realm. I mean, not that past performance suggests what future returns will be, but if nothing else, a stable environment, interest rate wise, allows people to plan in a more forth looking. The words are not coming to me today. It suggests that you be able to be a little bit more long term in your thought process and your planning, notwithstanding what's going on in the rest of the economy, which I think has people a little bit on edge.
You know, and I know you just threw out there the old past performance, future, whatever it doesn't indicate, but part of it does. I got into an argument with somebody that was beating up on boomers, right? And of course, I am on the tail end of the boomers, so I had to defend us, right? Go boomers.
But
Exactly. But he's going on, all you boomers, bought houses and you only paid like $20,000 and you didn't have to get that much as a down payment. And I'm like, well, in my first house, it was like $100,000. my salary at that time was 24 grand, percent interest rate going on there. But the real thing that I look back on, and this made me think, is when I started on that fire department, I remember one of the senior guys going, "Man, by the time you retire, you're going to be making over $100,000 a year." And this is a guy that was making 24 grand a year. All right. So if you start thinking about, by the time you retire and you're going to get 4 times, if not 5 times your salary at that point in time in 20, 30 years, then, it's like, that's hard to believe, that that's actually going to happen. It did happen. He predicted that perfectly. And then the other thing that's happened is that house prices, and both of you can correct me if I'm wrong on this one, but I see house prices going up 8 to 10% a year. I see salaries going up 2 to 3% a year when it comes to these things. Well, when we're dealing with those two different types of percentages on there, the longer you wait, getting into the housing game, I think the worse everything is, because the same person who was complaining about the boomers saying that get in, he goes, well, last year I wanted to buy a house, but it wasn't in that good a shape. And then now the house price is so expensive, I can't even get a junky house in that same neighborhood. Yeah, that's what's been happening over the last 100 and plus years, and it's going to keep on happening. I get it, we could get dips and stuff, but here, prove me wrong, all right?
Charlie, largely what I've seen in my 46 plus years on the planet is that these generational struggles that we so often think are unique to the boomer, the millennial, the Gen X, the Gen Alpha, whatever names we want to give to these generations. I mean, you want to talk about past performance showing you what is going to happen. This is exactly the thing. I mean, you guys, when you were young, I think there was a time. I don't know. It's hard for me to know if there was a time when you were young. But when you were young, you had some of the same thoughts about your folks. I remember.
Yeah.
I remember hearing a story about my great aunt and uncle buying their home in Palatine, which is actually the same home where my aunt and uncle still live. But when they bought it back in, I think it was like 1940. Their mortgage was $40 a month, and they had no clue how they were going to figure out a way to make those payments. And to a fresh young mind, they take that and then they apply that to their current financial situation, and they go, see how easy you had it? You only had a $40 a month mortgage payment. And it's like, man, first of all, there was not even a minimum wage at that point, and a $40 a month was like
a lot of money,
real money. Yeah. And look, as you get older and you progress on in your life, you will start to have experiences that will fill in the blanks between you and some of the older generations. And I've experienced that myself. It's hard to fully explain that to a younger person because they don't have the context to really evaluate that for what it's worth. And so it's those kinds of arguments, or trying to educate them, or you see here's where you've got it wrong. It's kind of no use to try to convince someone who's what they're experiencing is real to them, right?
It is real.
They're looking at it and they're saying, the neighborhood I'm renting in, if I were to try to buy a home or a condo, I couldn't do it. And it's like, yes, I'm sure that's true. And quite frankly, it's been true. It was true when I was a younger person. There's no way I could have afforded to buy a home in the neighborhoods I was living in. And in fact, when I bought my first home, I went all the way out to Elgin because that's where I could afford to buy a home that suited my needs.
That makes sense.
Look, I think that the cynical way to approach that is to say, you see how entitled these young people are. They want to be able to buy a home in Lincoln Park as their starter home, as their first home, and that's crazy. Why would they think that's even a thing? And it's like, that's what you wanted too when you were younger. You wanted to buy your first home in a great location, and the percentage of people who were able to do that or who have ever been able to do that are very, it's a small percentage of people. It's a slim number of people. By and large, until you start pulling in the to your potential, right, which isn't going to happen until your 30s and 40s, you're probably going to make some compromises in terms of the either the location or the characteristics of the home. You may,
Or the lifestyle.
or yeah, it may not, the home you buy may not be around the corner from your local. You may have to pick a new local, or you may have to move somewhere else or make some different choices. I mean, this is kind of just how it is, and I, anyone under the age of 30, maybe 35, is going to rip me for everything I just said, and all I can tell you is,
Been there.
let's talk in 10 years.
Yeah, no lie. But that actually brings it up to what I want Joey to take the lead on for, because, as I'm reflecting back, that house was around $100,000 and 17% interest. My mortgage payment was slightly over $1,000 a month, and that included property tax. I did have to pay PMI on that. It included principal, interest, homeowners insurance. It was all inside that escrow, and that was my monthly lump sum. Well, when you're getting $24,000 a year, that's 50% of your gross salary.
That's
that
crazy,
comes
to
in
be
there.
honest. When I bought my first home in
you.
2007, I was making gross $65K. My mortgage payment was $1,100 and I was like intimidated by that number. And that didn't include, I don't escrow for insurance or taxes, so it didn't include insurance and taxes. Add another $300-400 a month for that. That was a crazy amount of money for me. And I was making gross almost 3x what you were making, affording $1,000 a month. I mean, I don't have to be a math genius to understand that you guys were making some sacrifices, and
I did. It was beans and potatoes.
You were up at the very the top limits. You were at the Joey Matthews level of lending, where he loves to be lending people as much money as they can possibly qualify for, so that they can.
Ask yourself out. I like foreclosures. I'm kidding. I don't like foreclosures.
So, Joey, give us the education in that, and give us the ranges, and how does somebody know what they could afford, and are there any tools or anything? Give us some knowledge, please.
I mean, the greatest tool you're going to find is talking to a mortgage dude, right? Because no offense to
Or
borrowers
lady.
out there, or sorry, I use dude for everybody. I apologize.
Dudes and
to
dudettes.
ladies that don't consider themselves dudes.
Dude.
And I'm not going to assign anybody a dude or dudette. All right.
It's
So,
June. You got to be
it's-
inclusive, bud.
Whatever, man. It's off the rails. Fudge it. We're off the rails already.
Focus.
I'm sorry.
all right.
I'll mute myself.
So, in the world of what were we talking about?
Mortgage. What can I afford?
Talk
What's
to
a
a
healthy
mortgage person.
percentage?
How
Talk
the
to a
heck am I
mortgage
going to do
person.
this buy a house thing?
Yeah.
Talk to a mortgage
talk-
person, and
what,
then
what you believe you make may not necessarily be what you make, right? Documents matter. We document things, especially for you self-employed people. Unfortunately, I'm working with someone right now who, the way they file their taxes, makes negative $1,100 a month, and I'm like, I'm sorry, like we can put you on the path, right? But right now, you can't just amend your taxes from being able to qualify to qualifying, because all that. What does that look like? What does it look like? It looks like you committed tax fraud to buy a house.
yeah,
Right?
Devin's got a look on his face. It's called depreciation. You don't actually lose money, but it's the value of your stuff goes down, and I'm using air quotes, and that then gets well, in
It's
a
a vibe.
broad
All right,
sense,
so-
and I'm not giving tax advice. It reduces the taxable income for that year. If you've got enough stuff to depreciate, you might have negative however much a month in tax income, but your cash flow is a different animal. Go ahead.
So there you go. There you have it. There you have it. No, but yeah. So self-employed people in particular need to reach out to a mortgage person. It's going to make your life a lot easier, because if you think you're making $1 million a year, but you're showing $100,000 a year, there's going to be quite a gap in what you can afford versus what you want. In terms of affordability, it's going to totally depend on loan type. I am the VA loan nerd. I will tell you that the VA offers the greatest amount of affordability due to the lack of mortgage insurance, better rates, and not being a debt ratio capped loan. It's a residual income loan. What that means is we take all of your gross income, we subtract out taxes, Social Security, all those wonderful things. So we calculate your net, then we subtract out your actual monthly debt payments to report to credit, your minimum monthly debts. And the VA has a standard number that they use for your location, your family size, the cost of utilities for the property. And as long as you are meeting residual income, meaning you still have cash flow, a certain amount of cash flow after debts are paid, you are still good to go. This is more important for self-employed people because of what I just talked about, showing less income. The highest debt ratio loan I've ever closed on a VA was 76%. So
Whoa.
it looked like 70. Yeah, exactly.
The
But
high income person.
high income person that does not show all of their income, right?
Okay.
So they were still showing more than enough for residual income because it was a family of two because they're older. He was in his 60s, not older, but you know what I'm trying to say without being ageist. He was in his 60s. His kids were grown.
You threw a bomb at Charlie.
Boomers, yeah.
Yeah.
We're going to unite
I'm
and attack.
having a good day. Anyway, so 76% debt ratio, but I could clearly see he was making a ton of money that he was not claiming on taxes, which is fine, right? Do you, Bay? Yeah. You can
Joe,
close that.
let's get it, Joey.
Shut up. So on the conventional side, I can't go over like a 50.49% back end debt ratio. On the FHA side, the front end ratio, which is the ratio for housing, can't go over 47.99, and the back end can't go over 56.99. As soon as you do, it's a denial and automated underwriting. You can't get around it. So that's why it's so important to talk to the mortgage people who can actually run real numbers and use real income numbers, not what you think you make, but what you actually make. PJ, go ahead.
Well, so there's two things.
Hold on, Maggie. I do have a question. Those percentages that you put out there, are those gross or net? That's gross. Okay, sorry, Pat.
No, it's okay. There's two things I wanted to point out. One is that there was a lot going on there, and so if at any point you're listening and you just tuned out because Joey was going into
There is a lot of weeds.
Well, he's going into sort of mixing up a big salad full of mortgage terms.
Yep.
That's kind of the reason why you want to talk to someone like him. Now he was referencing VA and as well as self-employed.
FHA conventional.
Even if you are a W-2 employee, there's a few things that I think a lot of people sort of miss. So I was having a conversation with my cousin over Memorial Day, and he asked me a question about what is the down payment these days, and I was like, well, if you're FHA 3.5%, if you're VA 0%, but even if you're conventional, you could probably get a 5%. He was really surprised, and this is a cousin who's not his line of work is not far from housing. Like he works for like a exterior windows, roofing, and doors contractor. So he's not far off it, and he just didn't realize that what the options are out there. I mean that misconception of you've got to have however much to show as a down payment. Someone like Joey's gonna be able to show you, look, here are your options for making a down payment, and here's what that looks like in different scenarios. This is what you can afford, the range of what you can afford in terms of a monthly payment, and then show you what you can afford in terms of a gross number. I think 95% of the population would be surprised to learn that gross number once it's all boiled down to it. But they sort of make the assumption that, my gosh, if I was going to spend $300,000 on something, there's just no way I could do it. I mean, I don't have $300,000 liquid assets to spend on something right now. Could I buy a $300,000 home? Yeah, it would not be a problem. If I didn't understand as much as I do about housing, I might not understand that. But I also I wanted to just, as an aside, tell Joey about the influence that you have on me. I have a client, and we were talking yesterday about how he's going to get his money to closing, and he mentioned needing to initiate a wire from Navy Fed, and immediately I was like, "Do you qualify for VA?" Because my next thought was, if you do, next go around, I mean, we're 3 days from closing, so that's done and dusted. I was like, next go around, you ought to be going VA. Turns out he's with Navy Fed through I think his dad, he said, but I definitely before I knew Joey would not have thought immediately to advise someone that they should be seriously considering VA. So that's the kind of influence this man has had on me.
Well, I've learned a lot from all you guys too as well. But let's say that, somebody right now listening to us talking, and they have a piece of paper in front of them and a pencil so they can go ahead and start writing a bunch of notes.
Okay, so they're 60 plus.
All right, so they got 2 thumbs and a phone. All right, we'll go for the younger people. And Joey, what are the things that get included into the mortgage that they have to figure out what that calculation is? And how does somebody go ahead and find it? In other words, I'm thinking, like, how do I know what the property taxes are? How do I know what the interest and what my options for buying down? How do I know what is going to be my insurance rate? And all these things do come into play. Am I mistaken in that statement?
No, all those things matter, and I mean, honestly, to get the best property taxes, you have to go to your property tax assessor's websites because, and it's no offense to real estate agents whatsoever, but I very rarely see proper taxes posted on things like Redfin, Zillow, because, and I say those names because I don't get the MLS, like I can't, but Redfin and Zillow, they pull from the MLS, they pull what you're putting as a property taxes from the MLS. And if you're using 2022 taxes right now, and I've seen some listings that are showing 2022 taxes in Illinois,
Lazy.
Where's my 2024 bill?
Well,
right?
where's your 2024 bill? You want to talk about that?
Okay, this is Cook County. We're not talking about outside of Cook County. Outside of Cook County.
Outside of Cook County, you have your 2024 bill. It's going to be out.
Correct.
But
you
should
why
be
is
good.
my 2022 what's on the MLS? That's my question.
I mean, it's laziness. That plain and simple. I mean, real quick, if you're trying to find out what the latest tax bill amount was, couple different ways. If you are in Cook County, go to cookcountypropertyinfo.com, punch in the address. Presumably you don't have the PIN because most people don't even know what that is. But that they do have an option. That website has an option to use the address. You can punch the address and you should be able to find the latest property tax bill. In Cook County, it's going to be 2023. The second installment 2024 is going to be late this year again. In the suburbs, Lake, McHenry, DuPage, Kane, Kendall, Will, all of those, the 2024 bills should be out. You can go to, insert name of county treasurer, and you should be able to navigate through to get either a copy of the tax bill or the tax bill amount for 2024. So if you are running into that problem like Joey's describing, then that information is pretty readily available should be for any individual parcel of real estate anywhere in the Chicago area.
All right.
That's a true fact.
Nice.
That's a true fact. Very easy to find. Very easy to find.
Huh?
But also insurance. So I mean, obviously, right now we are in a insurance. I don't know. Insurance is expensive right now.
It's
right?
a turmoil.
Yeah.
Can I give you a little bit of good news that I found out yesterday?
I would love to know some good news. I'm a huge fan of good news. I don't know if you know this or not. Love good news.
I mean, write that
I know
down.
I'm a rarity.
Joey likes good news. State Farm apparently is going to be reducing their auto insurance rates come July. Apparently they did some math, and it turns out they are able to reduce their premiums for the next renewal, and that's starting in July. I found that out yesterday from a State Farm agent that Charlie and I both know. So.
Nice.
So anyways, if you're a State Farm customer, you will just get a little discount, not discount, but you'll get a little reduction. If you're not a State Farm customer, I mean, take that information and do what you will with it.
So go on, Joey. How do we find out what the insurance rates are going to be?
Well, you start shopping around for insurance right now, I am assuming, because I like to show people high numbers, right? I'd rather show you high numbers and have them come in low than the other way around. So I'm assuming in most situations, a $350,000 or more property, I'm going to assume $200 a month for insurance, a $2,400 annual premium, right? If it comes in there, cool, that's what we assumed. If it comes in lower, even better. Now you're spending less every month, right? So and obviously the higher the value, the higher the coverage of the house, the higher your premium's going to be. That's just simple math.
And that changes also with the location, right? Because I think people, like in Florida, are paying a lot more.
So this is Illinois, Chicagoland specific.
Thank you.
If I'm in Florida, I have one going right now. It's a 5. So it's more expensiver. That's almost what, $9,000, something like that.
It's a lot.
I just like the whole line of more expensive-er. But
Yeah.
Condo will be different as well because it would be a smaller amount
will
on
be
the
cheaper.
insurance number, but you'll also have the monthly assessment, which there's another number that realtors love to,
Mess up.
make a surprise for us.
Not include the special assessments that are out there.
No, well, that's a whole other issue that
But
we'll do a
go-
very special episode of the Chicago Housing Experts on special
over
assessments for
special
condos.
assessments.
Yay! Something that makes me want to. Well, I can't say that, but
No, you
it makes me
can't.
want to hurt
Housing
myself.
Experts.
But
After hours.
I think it's also important to point in there about
Someone play the
not all
music.
insurances are the same, right? I mean, I've been having clients that have been using insurance brokers, and they're just going with the absolute cheapest, person that or company that gives them whatever dollar amount coverage, and then all of a sudden 60, 90 days go by and they get these letters of cancellation. It's I don't know. And then I have other people that they try to make a claim and they get denied on these things. So I don't know. The numbers are over the board, but then also the services. And I don't know,
Yeah,
do you
I
have
mean,
anything to add on that? Either one?
We're bleeding into another topic of conversation. I mean, if we're talking about how are you going to afford to buy a home, and
Or
we're
know
trying-
what you're going to afford.
and we're
Yeah.
trying to parse all of the different numbers that go into what am I going to end up paying each month.
Yeah.
$2,500 at the price point that Joey said earlier, $350K,
Yeah.
that is going to be well enough to buy you insurance from just about any company. If you find out that the insurance premium for a $350,000 home is more than $2,500 for a year, you need to start asking more questions because there's probably something about that property or you or the seller that is driving that price up, and that might be a red flag in and of itself. But $2,500, based on the numbers I've seen for single-family detached homes for an annual insurance premium, that would cover just about any of my clients unless they're buying something that is very expensive.
And another thing you guys were mentioning, homeowners associations, Joey. How do you find out exactly what that homeowner association fee is?
From the HOA directly.
Really? And
Boom.
so you have to actually contact the management company or the...
They get a condo questionnaire filled out.
Oh,
You want to talk about what a condo
on
questionnaire
everything
is?
except for VA. VA doesn't need a questionnaire.
So how do you guys just take their word for it?
Yeah, we just send a message out to whoever is running the association, asking what the monthly dues are for that unit. Because it also varies unit to unit.
Well, of course.
In some associations, yeah.
It will. I mean, just about any
goes by
association.
square footage, right?
It should. So some. Yeah. I mean, I'm gonna get off into another tangent, but yeah.
Let's go.
It should be based on square footage. If it's condo, if it's just an association, and like let's say in Joey's association, where I know that he goes around measuring everyone's mailbox height. Because he's that kind of guy.
I hate HOAs.
He drives around in his Cybertruck and he measures everyone's mailbox, and then he sends a letter to the association with his list of violators. And that's the kind of person that Joey is. He's very strict on the rules. He wants conformity. He wants to live in a community that is not going to be. It's very much the broken windows policy that our America's mayor Giuliani articulated back in the 90s in New York City, where you fix the broken windows and people shape up.
Or you put a Starbucks there.
One of the
Ooh.
three.
Ooh.
So let's go. So we have the actual mortgage payment. We're going to have points. We got interest. We got PMI. Explain PMI to. Explain it to Devin over here, who might have to get PMI. He's our producer.
Devin, you are protecting a mortgage lender in the event that you default, all right? You're not paying an insurance for yourself. You are paying the lender's insurance policy to make sure that if they have to cover your losses, that an insurance company will give them X amount of dollars to cover so they don't lose anything by writing your higher risk loan because you put less than 20% down.
They know you're a naughty boy.
Yeah, so PMI coverage is going to be based off of the down payment that a borrower is making. So if you're putting 15% down, you're going to have a lower PMI coverage, therefore a lower PMI premium. PMI is private mortgage insurance. If you're getting an FHA loan, it's a mortgage insurance premium, a MIP. It is a government insurance policy, and those numbers are always going to be the same from 0 to 5%. I'm sorry, 3.5% to 5% down, and then 5 to 10% down is a standard set factor for what your costs will be and what the coverage is. So, if you default on an FHA loan, you will the servicer will be guaranteed 25% of that purchase price. So if you buy for $400,000, the servicer is still going to get $100,000 to make sure that they do not have any losses, even if you only put 3.5% down. VA loan also 25% coverage. However, you don't pay a mortgage insurance. You pay no mortgage insurance whatsoever on VA. If you are a non-exempt veteran or non-exempt active duty member, for the funding fee, then you pay no sort of mortgage, equatable mortgage insurance. If you are non-exempt, you do. I'm sorry, I said that backwards. If you're exempt, you pay nothing. If you're non-exempt, meaning you don't have a compensable disability, you aren't a surviving spouse, you don't have a Purple Heart on active duty, then you are paying a set number up front for your mortgage for your funding fee. If you're a first-time buyer and you're putting nothing down, you're paying 2.15% of the loan amount. It's rolled into the loan. If you are buying with 5% down, it's 1.5%. If you're buying 10% down, it's 1.25%. If you're a subsequent use person, the 0 down is 3%, but the 5 and 10 are the same as the previous. So I know, hey, let's just confuse people with talking fast with numbers, right? Let's do this.
No, I mean, a lot of that made sense, but then I got confused with one thing. You were talking about a conventional loan with 5% down or 10% down, and then I'm hearing, do you pay PMI on a conventional loan?
If you have less than
20%
down, you got PMI. Absolutely.
Interesting.
Now,
I did
unless
not
you
know
buy it
that.
out up front, you have the ability to do a PMI buyout up front. So that's something that you got to weigh the market. Right now, I'm not a big fan of PMI buyouts up front because we are in an appreciating market, and you have the ability to potentially call your servicer when you believe you have about 25%. Technically, you can do it at 20% equity, right? But
I've never
25 is
heard
gonna give you a safer
anybody
number.
get that, though. They always
I
have to
will show- I've done it
refinance.
personally. I've done it
Really?
personally. Yes, at 1,000%. I had to pay for a broker opinion letter. It was like $450, whatever, which is highway robbery for a broker opinion letter, in my opinion. But
Okay, you're gonna get a full appraisal for that, just about.
But I mean, it got rid of my PMI, and I was paying about $90 a month in PMI. So I was like, all right, well, the return on that is pretty quick. So
Yeah, 4 months.
after 5 payments, I'm ahead of the game.
5 months,
Yeah, and look, let me just say a couple things because I can just hear in my head the comment section of this where it's like, oh man, why should I have to pay PMI just because I have less money down, or why should this whole thing is a scheme meant to just extract money from us. I mean, the flip side of this equation is just to understand that the idea of a 30-year mortgage is a pretty new one, all things considered, in the grand scheme of human existence. It really didn't come into play, I don't think, until the 30s or 40s when we first had an FHA, right, the Federal Housing Administration. The whole point of it, the whole bedrock of it, is the idea that the federal government wants people to own homes, and so they're willing to backstop lenders on a lot of things that otherwise lenders wouldn't make loans on. I mean, the idea of loaning 80% of the value of a home I think if they just did the math on that and there was no government backstop or assistance, they would have to get extremely, very, very much higher interest rates to make that make sense as an investment. And if you then extrapolate that toward making a 10% down payment, a 5%, 3.5% down payment, you're needing additional backstops in order to make that make sense for someone who's otherwise going to be able to make a much less riskier investment, i.e. a 10-year treasury or whatever almost guaranteed return investment that you can make, rather than investing it in someone who you're hoping they'll repay their mortgage and that they don't have some kind of illness and that they don't have some kind of job loss or something else that causes them to default on their loan. So before anyone complains about all of the different complexities and overlays and this kind of insurance and that thing and the other thing, understand that without all of that, we're all renting from billionaires. That's basically it. And unless you have cash money to buy a home, which not that many
Most
people
don't.
have, a fairly small minority of people in
Devin,
this
you
country
got enough
have.
money to pay cash?
I don't. I mean, I'm, so it's like that's really just the point I wanted to make is that all of this sounds maybe even punitive to someone who is just trying to buy a home, but you're not even in that. You're not even having that conversation with anybody without all of this framework.
We did just get a question. Does the mortgage insurance premium, right? Is that what it's called? MIP? Is
for FHA it is.
for FHA. Does that
PMI.
ever, does that ever go away on an FHA?
If you put 10% down, it goes away after 11 years. If you put less than 10% down, it is a forever mortgage insurance. For that
Most
loan.
So you would have to refinance to get rid of it.
That is correct.
most people are in their mortgage loan for an average of how many years, Joey?
Man, I would say no more than 5 generally.
Yeah,
Whoa.
5 to 7 is what I've heard. So whether you're moving or refinancing, I mean, I would assume you're going to be paying mortgage insurance on an FHA at least, until you're able to get into a different loan. And as Joey said, if home values continue to appreciate at a healthy level, which
They're going to.
I don't
They
know.
have been for the last 150 years.
all right, you have the Charlie Belfontaine guarantee of home
Guarantee.
appreciation.
8 to 10% a year.
If that doesn't happen,
Except for the
he will
eights.
pay out of his pocket to guarantee that statement.
I got
You
50
heard it
bucks in my
here.
pocket, and that's all the money you're getting. All right?
He will give you his pants.
They're not really worth that much money, so that I'm more than happy
I'll
to
take
get
the
to.
pants.
But, it's funny you say that because now you're making me reminisce. Again, I got my mortgage 17% on there, but it was an adjustable rate mortgage. And I remember that it kept dropping almost, every month. It kept going down a little bit each month until it got down to 10. And I was like, oh, my God, it'll never get lower than this. So we had to refinance and lock in at the 10% only to go ahead and refinance again another 2 years later.
Oh, your mortgage broker loved you.
Yeah, everybody made a lot of money up front,
Reminds me of the mid-2000s.
But so where were we at, Joey? Help me get back on there. We got principal, interest, insurance, taxes,
insurance,
PMI.
Yeah.
What else gets added in there?
That's it for your payments. PITIA, principal, interest, taxes, insurance, and the association dues. Right.
All right, and is that number? Is that 47% that you were talking about?
On the front end, yes, sir.
All
Yes,
right.
sir. For a FHA loan.
What about other loans or
Other loans,
like student loans, car loans, things like that?
Those
Credit
things
cards.
Those things count against your back end debt ratios, so that would be your total debt ratios, right? So you have your primary housing expense on the front end, and then everything else on the back end. Okay. Car insurance is not something we look at, just so you're aware. But car loans, got to look at those. Student loans, if they're deferred for more than a year, we can qualify them at a $0 payment. If they are deferred and they are not more than a year out from being repaid, then we have to qualify either at the real number that they will be with a letter from your student loan servicer, or at 0.5. Well, depending on the debt, on the loan amount or loan type. Sorry. So, Freddie FHA, they'll allow us to do 0.5% of the balance. Fannie's going to be 1%. And I'll double check this because I feel like Fannie also went to 0.5%. FHA is 0.5%, and then VA is 5% of the balance divided by 12. Which who's good at math to tell me what the actual percentage is?
I don't know.
Yeah, I'm not. So it's the best one. VA is the lowest qualifying number for student loans and deferment.
Yeah, but not all of us
12
draft
months.
dodgers can get the VA loan, all right?
Yeah, well, it's not that I don't have drafts, dog.
I'm getting a funny look coming in there because I used a derogatory term about myself, and I did not dodge a draft, or I've never had to experience a draft. So,
Yeah, well, I mean,
was too
you
old
keep
by the time
complaining
the
about your
prescription
bone
was
spurs
around.
for some reason.
wrong person.
That's a Trump joke. It's a Trump joke because he dodged the draft based on bone spurs. I get it.
He's
I
a real
get that
American
joke.
hero
Oh,
still.
boy. Let's focus
Let's go.
back on the
He
back on the
prefers his
numbers.
soldiers that didn't get captured, John McCain. Anyway,
Let's
what were
talk
we
more
talking
about that.
Let's not.
This is a good time.
I actually went to
Truth
Vietnam,
matters.
and if you if you go to like the museums there, and you see up close and personal like some of the stuff that we've only heard about, you'd be even more disgusted.
No, that I don't want to be. But I want to get back to the dollar cents. You know, we are supposed to be talking about real estate. What about utilities and stuff like that? Does that come into play?
Not on anything but VA. VA, we take the square footage of the house, multiply it by 14 cents, and that's what we consider for your utility costs to count against your residual income. FHA and conventional, don't look at that.
Interesting.
Put on a sweater.
Keep the
on a
cost
sweater.
down, right? Unbelievable.
Well, in Illinois, you got to have heating systems for VA. You don't have to have air conditioning, but you got to have heating systems. If the average temperature falls, what is it, below 52 degrees in any given month, I want to say? I know Charlie and I did a video on it a long time ago. I think it was 52.
I thought it was 65 degrees.
It could be 65.
Yeah.
You know, Charlie, you're the inspector. I'm going to base that one off you, dog. Shoot.
Yeah, I'm pretty sure that once it gets below 65 outside, you have to provide heat. But I think that's a tenant law. And I'm not too, every home, every room, in a habitable room, I guess I should be clear on that. Every habitable room needs to have a heat source. There is a couple of exceptions. For example, if you got a half a bathroom, so no shower in there, you got a half a bathroom that's surrounded by a heated area on all 6 sides of that room, then you don't have to have a heat source into that room. And you're right, you don't need air conditioning, but you do have to have heat. And I'm sure that that's going to be different in different parts of the country, but because we are in a cold weather climate, heat is mandatory.
Big fact. Big fact. I don't care where you're at, though. AC is not mandatory, which is crazy.
Really?
It's wild to me, yeah. You don't have to have AC in any property.
But I assume then down like Arizona, Florida, do you even need to have heat? Is that required?
It gets cold in
No,
the
because
desert at night, man.
Not if your temperatures are getting above 6. Don't dip below 65. So you wouldn't be required to have either in these areas.
That's interesting.
You guys dip below 65.
It goes by monthly averages.
The high or the low?
Both, I'm sure.
Yeah, your average temperature.
Fahrenheit or Celsius?
Would you behave? I don't know why you try to.
Celsius, holy cow.
That's hot, yeah. Now you got me giggling on that stuff. So is there any tools, anything out there where somebody can get that information and they could punch in all that stuff and find out?
Absolutely. You could call or text me at 630-235-2405. Swing by the VALoanNerd.com and we'll talk about the real stuff rather than you messing around on the internet.
I love it.
Can we say putzing around? Is that
This
okay?
has been the Chicago Home Experts. I love you.
Hey, we're Fax Meter.
This is why I don't talk so much. I get heated and then I slip.
No, you're doing just fine. But everybody might have heard a little ding-a-ling going on there. We had
What?
we had to go ahead and give Joey a move. I'm in a bell,
People
ding,
gonna
ding,
be
ding.
like, wow, the show's like a minute a minute shorter this week. I wonder what happened.
We'll just go a little bit longer on there.
Boo.
So yeah, no lie on that one. I don't know.
I like
gets-
the guy in the
thing
in the
is,
sweatshirt that says
you're not
FU.
actually serious. You're not actually serious about buying if you're just messing around on the internet playing with calculators to figure it out. If you're serious about buying, reach out to someone who can actually give you numbers, give you the real scoop on if you can make it happen or not. Because otherwise, you're window shopping. You're walking past Macy's, staring at everything that you think you want but don't really want because you're just going to keep walking past.
Yeah, but isn't it? I mean, is it a bad idea just to get an idea? Hey.
No, it's not. That's why you should call or text me 630-23. Like I'm like. I'm
Say
sorry,
it, 630-235-2405.
I love that you know my number. You're good at this. That or you're looking at a screen. But seriously, if you think that you're in the market, you don't
Let me
rely on the internet, man.
let me make
It's
this-
lazy.
let
Well,
me
you
make
can't
this-
even buy a house unless you get it,
Let me make this more
pre-approved, right?
simple for people out there because it's like, well, am I in the market? I don't know, man. How would I know unless I just go, I'm in the market? Look, if you are 3-4 months out from renewing a lease and you know how much you are prepared to pay rent wise for your
This is
next
good
lease,
info. Keep
okay?
going.
What I'd like you to do, if you're thinking to yourself, I'm either going to renew or I'm going to find a new apartment or whatever I'm going to do. That's a good place to start as far as, okay, so if I took that amount of rent, what could I afford in terms of a purchase? Okay. Now, that's where you may want to take that information to someone like Joey because he's going to be able to take that. He's going to be able to, I don't know, Joey, you're not going to take a hard
Reverse
pull on the.
engineer it.
Yeah, you're going to, whether he'll be able to at least reality check. Okay, I mean, it's one thing to be able to afford rent. It's another thing to qualify for that for a mortgage. So that's kind of, the first threshold. And then you can work with someone like Joey. He's either going to be able to say, look, here's what you can afford. And you might go, oh, cool. I've got some moves I might be able to make in terms of deciding whether to continue renting or to dip my toe in the purchase market. Okay. Or you would go, yeah, you know what? Where I want to live and what my needs are and what my lifestyle is, I'm still in rental mode. Joey's not going to be mad at you for making that decision. He's going to go, cool, I'll reach out to you in 8-10 months time, see where you're at. And, he's going to be your ally going forward when you're ready to make that decision. If, you're not required. You could, Joey will take your call from now until 2050. And if you never buy a home with him, he's still going to like you. That's what's weird about Joey. All right.
Well, that's everybody here.
No,
I mean, everyone
no.
comes.
I'm
talking about the four of
use
us.
me as a free coach for the
Oh.
next 25 years, at some point I'm not going to like you. That's the long and short of it, man. I don't have patience for that. But, so that's kind of the nexus between, okay, how do I cross that gap between, I think most people are comfortable with the notion that I can afford X amount for rent. I can rent something for a year. I'm feeling pretty good about that. It's not a long-term commitment. I mean, it feels long, but it's not that long. It's not a 30-year commitment. But if you were able to take that and make that into a monthly mortgage payment, what would that look like? And if that looks good to you, then it's probably time to start taking that more seriously. But that's the analysis that I would kind of make in terms of trying to figure out, do I call Joey or not? If all you can afford is a room with roommates and you're at $650 a month for a monthly housing payment, yeah, you're in rental world. That's just the long and short of it.
Yeah.
But if you're up at like $2,000, $2,500, $3,000 a month in your own out of pocket housing cost, I'd probably talk to someone like Joey to find out. I mean, even if I can't afford in my perfect ideal neighborhood, maybe I go 2 neighborhoods over, and then then I can just buy an electric scooter and get back to my local that I love. Or that new neighborhood's going to have its own awesome local, and it's going to have its own cool stuff. when I moved to Lincoln Square from Roscoe Village, I was like, I didn't really know anything about Lincoln Square. Turns out Lincoln Square is pretty cool. And, that's been my experience with every part of town that I've lived in. There's cool stuff everywhere, man.
So, Joey, how long does that process take where somebody could figure out how much house they can afford?
After you talk to me and you fill out an application, you get my docs in, I can tell you generally within a couple hours.
Okay.
It's pretty quick.
And when you say docs, what
Documents,
sort of
I apologize.
No, but what
W-2s,
documents
pay
did?
stubs for the W-2s, pay stubs, bank statements. That's what I'm looking for.
Passport,
That's the
birth
important stuff.
certificate,
No,
long form
If
birth
you're
certificate.
self-employed, then your business and personal tax returns are what's going to matter because I have a much more in-depth analysis of income in those situations. Mhm.
But that can really harm people, I guess, if you start thinking about it, because a lot of, when you're a business owner, the biggest thing that I see differently between W-2 and business owners is, if you're a W-2, all the taxes come out first, and then you get to spend the money. When you're a business, you get to spend the money first, and then whatever's left, you pay taxes on that. All right. So a lot of
Wait, what?
businesses, what's it?
Wait, what? There's supposed to be money left?
That's my point. A lot of
Jeez.
businesses are going to want to spend. I know I do. I want to invest. I want to spend. I don't want to really turn a profit. I want to only pay taxes on the money that I put in my pocket.
I'm supposed to pay taxes? Oh, boy.
Yes, we are supposed to pay taxes. This is the greatest country in the world, and I want to support it every chance I can. And I do believe that sincerely. But, this still comes into play with, how does that really affect? And it's weird because, I don't know, would that get me in trouble if all of a sudden now I want to invest less in my business so that I'm going to show more of an income on there so I could get a bigger mortgage where it comes with it? I get a little confused on that.
Yeah, you are confused. Look, a lot of this is accounting, all right? And I don't think we have an accountant on the show today. And I was saying earlier about depreciation and different things that are, tax losses. And, there are ways to kind of move things around on paper that both ways that you show it are technically correct. It's just a matter of showing it in a way that meets the need that you're trying to meet. Look, there are tolerances. Where does it go from being, I was trying to do it one way and now I need to kind of, show it differently so I can do something else. Where do you start getting contacted by the IRS about tax fraud? Trust me, you have to be like hiding tremendous amounts of income or deducting crazy things in a huge amount of money. And honestly, Joey's not a rat. So if he gets your tax returns and he goes, you don't qualify, next year, let's talk before you file your tax return because we're going to maybe want to move some things around. You might get less money back or you might pay more in tax, but you'll be in a better position to buy a home. That's fine. I mean, there's nothing wrong with doing accounting differently as long as you are within the generally accepted accounting principles.
Sounds like a plan to me. We are running out of time, as usual. So here's the big important question. I'm not going to do it this time. Joey, if you don't mind, give us your contact info again, please.
Joey Matthews, 630-235-2405. You can find me at theVALoanNerd.com across all social media is at the VA Loan Nerd.
And Patrick, please.
Patrick Loftus. I'm a real estate lawyer. Find me on social media where I can say swear words. I don't, but I can. Loftus_law on Instagram. On TikTok, Loftus Lockham. Follow my YouTube channel, Loftus Law. Lots of cool stuff.
Outstanding. And my name is Charlie Belfontaine. I own Chicagoland Home Inspectors. And you can ask all these questions and get hold of us even more at chicagohousingexperts.com. So please sign on, join the club, and be a part of everything. I want to give special thank you to Devin Tingle. He makes everything